So hello active traders and welcome to Trading Week Ahead for today, Saturday, July 17th, 2021. I'm Ken Calhoun, your host. Hope that you're doing well in your trades. We've had 4 red days in a row. The first time all year long we've seen that particular phenomenon. How many of you spotted that? You can see 4 red candle days in a row here at the S&P right under 4,400 resistance. Big selling day yesterday though, right? We're in the start of a 3 to 4 week earnings season. Despite banking and finance earnings being strong this past week for the most part, markets shrugged it off and sold off, probably because of things like, well, you can speculate, coronavirus Delta variant, increased inflation, increased taxes coming, all kinds of headwinds for the markets. And so for that reason, we've seen a lot of pressure downwards lately. And see, 4,400 is resistance, and I'm going to keep it simple and use 4,300 as support. The other thing we always pay attention to is our VIX. Let me start off by asking you guys a question. How many of you think we have more pain ahead? How many of you think the market's going to, well, for me, pleasure, because I trade inverses. So when the market crashes, I make money, so that's good. Yeah, but how many of you think we have more selling pressure ahead? Yes, no, or who knows, right? The correct answer is we don't know. We just react. We don't predict. But I'm just curious. How many think we may be at an intermediate top due for a pullback? And that's how I'm positioned. And I put on some starter trades this past several days to accommodate that. You can see our VIX is starting to spike back up here over the 18. It closed, I think it was 18 and a half. Yeah, 1845 on the VIX on Friday yesterday. So we are seeing a VIX recovery. It's kind of meaningless now unless it gets over the 20 is the number that the street looks at and on this chart 22 is important. So remember the VIX spikes up and goes right back down again. It's starting to spike. So we're early in a potential sell configuration in the market. So that's an important rider downer. Something else to pay attention to is the strongest of the charts out there. Let's cycle through some of these charts just briefly. I'm not going to babble on about these charts and do much commentary other than to bring them to your attention, because these are especially strong charts. Thanks to many of you. I'd mentioned some of these charts this past couple of weeks, and thank you for that. Some of them come from my live room members and others from myself as we find the strongest charts in the market to work with despite the weakness that we've seen lately. Let me see what else. Let's take a look at a few of these charts to get started, and then we'll look at swing trading charts first, then we'll look at intraday charts coming up next. So let's cycle through these. JYNT, LSI. If your charts don't look like these, then you're not trading as well as you could be, right? You know, traders often ask me about charts that are going up, is it worth trading? Well, you have to look at the range, the volatility, the risk reward, the recent strength, what kind of pattern it shows, and 45-degree angle breakouts with a clean, tight range like this above uncrossed 50, 100, and 200 SMA lines are always the strongest directional breakout. Now, personally, I like charts under 30 or 40 bucks a share. But for those of you who trade some of the higher priced ones, this one, remember I told you last week, not to be an I told you so, but I told you so, it was going to be a breakout winner because it was a, ascending triangle, kind of a pennant pattern. I even drew out the triangle pattern here and I said it'd be along over the 18 and a half or so. And boom, if you listen to me, you're up a couple dollars. So congratulations to anyone who took CVA. Or any of these guys, right? These are some outstanding charts. And I like to cover strong charts in my live room for people. This one's really good, PLYM. This is a wonderful breakout chart because it's going up despite the stock market going down, and it's going up with strength. It's got a really good strong breakout profile, this PLYM chart. This guy's pulling back off its highs, so you're fired. If it's pulling back off its highs, give up on it. Don't try and wait for a bounce. Just trade what's getting money, what's taking out new highs. Now, Cube is a great chart, but I mentioned it earlier this morning. Who can tell me this is one of the best looking charts in the whole stock market, but yet I'm not going to buy it Well, for two reasons, mainly because the market's going down, but other than that, the reason is it's at 49. It's at a $9 point right under the 50. So as I've taught you guys for decades, we sell the nines. Also, we have a bearish engulfment up here confirming. That's where you've got a large whole row body candle red like this wrapped around the previous candle. Again, learn how to trade candles from my colleague Steve Nissen at candlecharts.com. He's who I learned from. He knows what he's talking about. He's the world's foremost authority. So learn from Steve Nissen. Anyway, the candles are great. It kind of gives me a warm and fuzzy that I'm correct in not buying here at 49. If it breaks over 50, maybe 50 and a half, not a trade recommendation. I'd hit this, I'd trade this, but I'm not going to trade it here because it's currently, and see, if you didn't know what to look for visually, the red flags to look for, you might blindly buy it at 49 and a half. Have it go up to like 50 or 50 and a quarter on Tuesday, Wednesday, and then crash and burn down at 45, and you wonder what happened? Well, why did it stop out? Well, those are red flags, bearish engulfing and the 49 point. So knowing the red flags is important. Also, charts that are probably too volatile or too wild for swing trading safely or smartly is this one, AMEH. Now, sure, it would have been great if we'd all bought it at 30 or 40 a share and sold it at 80 and doubled our money. But you and I, unfortunately, probably weren't on that particular ship. So we weren't on that boat. So we didn't do it. The range is too extreme on this. So unless you're trading extremely small size, it looks really good, but not for a swing trade here. That looks like it may drop back down to 65 or 60. So I'm not going to touch that. Here's another one, NABI. Anyway, you're looking for strong, durable trends or consistent trends. If you want to become a consistent trader, you got to look for consistent charts. And these type of charts are the type that at least I like to focus on and hopefully keep you guys up to speed on as well. Now let's take a look at a couple of intraday charts here. Let me pull up our day trading interval chart here. I'd called GME long for my members yesterday, 171, and I said to sell the 174. So we didn't get the full length of the run, but that's a really good example of a strategy of buying a pivot. In this case, we wanted to go long on the pivot because it bounced off the previous day's close. I didn't call it early, though that would have been fine. We waited a little bit further up to 171, jumped on board, and it ran all the way up to just under 180. What do you notice about the law of nines here? It was exactly correct. Yet again, I just saw that myself for the first time. 79, you don't buy nines. Never buy anything with a 9 in it. Here's why. Another good example, like that other chart that was right near the 50, right? Now, I was trading this yesterday because I love this instrument. I bought it starting at 26.8. Anyone else trade UVXY yesterday? I got a couple of skeptics in my room that don't like this instrument, but most people love it because it runs up nicely when it runs. It ran from 26.80 all the way up to 29, closing up there near 50, or I'm sorry, closing up at 29.36. You can see we got an order in the tape here. Somebody bought 50,000, almost 52,000 shares, almost $1.5 million worth in a single trade into the high volume close. So obviously they're betting this thing long like I am. Who can tell me which candlestick? If this were a daily candlestick chart, what would this chart pattern be? For the fellow candlestick aficionados, you need to learn how to extrapolate what the story of volatility and price action is in the charts without it being, handheld or told to you. You've got to independently figure this stuff out. So anyway, what is this chart pattern? Anyone? A pennant? Nope. Ian got it right. Good job, Ian. And Kurt got it right. Good job. We got two. We got Kurt and Ian. Thanks to others for typing in. So let me make it more clear. If this were a daily candle, well, let me repeat myself. If this were a daily, in the interest of time, let's jump ahead. What do those two daily candles comprise? No, I didn't need to pull up, I mean, for myself, I didn't need to pull this up because I know by looking at the 2-day chart what the pattern is. But what is that pattern? That's a bullish engulfing, right? Following a downtrend, you got a wide range green wrapped around the whole row body red. So that tells you to buy above the high over 30, right? That's what this is saying. It's saying buy me over 30, and I'm going to. In fact, I already did. Ooh, I'm a real trader. Imagine that. An educator who actually really trades like every single freaking day. I'm not just a guy who talks on PowerPoint charts and squiggly lines. I'm a real trader. So I bet just around 12 grand against the market. Here's my actual P&Ls for my 2 Fidelity accounts from the highest dollar value positions I'm in, still relatively small, what I call pilot trades or starter trades. So I'm in, what, 112 plus 43 is 155 shares of UVXY, which would be 1,500 shares pre-split, because I did a 10-for-1 reverse split. Anyway, I also like SRTY. SOX's was up sharply. It made a really nice pattern up to the, where was it, 840. I told my traders long over 810, remember guys? And UVXY, I called it off the bottom as well. Anyway, some real trades that I'm in. And again, just a little bit, this is, you know, the screen cap from yesterday. You can see I'm in just starter trades. Very small size though. When I bet against the market, I go in 25 grand plus. I'm just getting the party started here by shorting the market. Now, I could be wrong. It could bite me in the butt and wipe out my profits from yesterday, but I'm not going to sweat it because I think the market's going to keep dropping. So I'm just curious too, and this is for the benefit of all of you who are new here, but how many of you agree that part of the dialogue of any trading educator should include recent screen cap proof of real money trades that they're making to demonstrate that they are actually what they say they are? How many people agree that people teaching trading should be required to prove that they really trade? Because the truth of the matter is the trading education industry is wildly unregulated and it's terrible. You've got all these people that aren't even real traders pretending to trade, misleading people, making phony baloney performance claims, like those morons making YouTube videos claiming to make $100,000 a day, trading thousands of shares of a $3 stock. Fortunately, the Federal Trade Commission is there to take care of the bad actors. Unfortunately, because of limited resources, it takes a while to get around to cleaning up shop. So you've got to do your own due diligence when it comes to who to trust to trade. You know, you can trust me to be honest. I'm very candid about everything. My wins, the good, the bad, and the ugly. I always like to tell you about wins and stops and near misses and all the rest of it. The point is, I firmly believe that anybody in any education industry should have experience, a real experience, and not just talking about charts, but actually really trading them. Because that's how you learn how to become a real trader, is learn from someone like me who is a real trader. Not these people who talk about magic chart patterns and special mastermind coaching programs for normally $10,000, only $5,000 now for the next 20 minutes. I digress, but the point is, I'm starting to short the market, so we'll see if that works out or not, right? Because I don't know about y'all, but I love this chart. This is the strongest UVXY day I've seen in quite a long time. The reason we got a 3-point delta, a 3-point range on this guy, 26.50 to 29.50-ish. So within 10 or 20 cents of a $3 range on a $30, you know, near 10, over 10% range on this yesterday was especially strong. Now visually, a better chart pattern is to be found in both SOX's and TISA, right, our semiconductor inverse. Up, up, and away. Anyone else trading SOXS? Anyone else out there shorting the semiconductor industry like I am? Boom, nailed it, baby. Cha-ching. I told my traders long yesterday at 810. This is my classic 2-day Calhoun breakout pattern, and again, I really trade. I was going to say again, I'm not going to show this anymore. I'm going to close this guy. And get this out of the way. What I wanted to share with you is that that's the type of alert that I give my traders in the live room exclusively at Trading the Open. Now you can still type in tradingtheopen.com, and I set up the forward thing so that it forwards over to here, but here's the new live room page I've had up for the last year or two here, Trading the Open at trademastery.com/live, and it's where we learn together how to mostly day trade as well as swing trade the strongest of the charts out there that we can find together as a team. Okay, so that was the SOX's chart. Let me pull up TZA for us. Another wonderfully strong chart. This is a bullish engulfment confirmation that they're selling what? TZA is what? That's a small cap, the Russell inverse. So small caps and banking and finance tend to lead the market down, as does technology often, as they rotate out of growth and into cyclicals and commodities and the rest of it. The point is the market's going down. You really want to stay focused on which of these charts have the best move to the upside. So I was calling this long for my members. I think it was 33.30 or somewhere in there. Anyway, it ran all the way up to 34.5, so another good inverse. Some of the intraday charts we were covering yesterday include SGOC, because we knocked it out of the park earlier in the week, and it did really good for us yesterday too. Really good range in that one. AMC was good for us, especially on Thursday. It ran up. Yesterday, not so much. Virgin Galactic got crushed and sold off yesterday a little bit down to the 30. And again, it's finding support at the decade value at the 30. That's why you don't short right above, multiple of 10, and you don't buy right below it at a 9. You don't short it right above a multiple of 10. NEO had really good range. NEO, I called the bounce on this guy correctly too. Notice the range of Thursday, yesterday. You can see the 2-day chart. This is 2 days, Thursday and Friday. The range is the same day over day, and that's an expectancy or an expectation. I would advise, well, I don't advise, but what I look for in my own trades is I look for, is the range extended, or is there still room to run? So the ranges, you'll notice the approximate range, the high-low, open, high-low, close, the high-low range is about the same day over day. So for that reason, you're willing to pay attention to the daily ranges and see where they run. And also, if there's follow-through momentum in the charts in the current session. I'm also long SRTY, and again, you can see why it's the same thing. It's a Russell inverse. This is a close-up look of yesterday's stock market, and you can see it lost support. One thing that I want you to be clear on is, and I was telling my traders this too yesterday, is always pay attention to previous day's low as support for the current day, which it turned out to be for several hours there before it finally gave it up and lost the low. But do pay attention to the previous day's open, high, low, close, and use that to help make smart trading decisions in the current day. So for example, UVXY, I bought it live, and I even showed traders the P&L proof and all that starting at 26.80, and then I scaled in on the way up. Anyway, this is ultraviolet X-ray, or I'm sorry, UVXY, one of our VIX ETNs. It's got really good directional strength. I think that's going to wrap me up for today. It's been a long week. Let me see if any questions or other tickers to look at. Let's take a look. Let's see a question. The SPC was good. Let's see, EDZ Friday, Spiders 400 target. I'm not trading the SPY. I'm short the market, so no, I have nothing to do with SPY. If we take a look at the, do you mean on the, let's take a look at the daily charts. Let me pull up the daily chart here for us, and we'll get to it. If we take a look at this, the S&P, trying to get this pulled up correctly. Trying to move this dang mouse over here to the SPY. The SPY has been really strong. On this chart, or if you look at the S&P chart, I use the spiders in the live room so we can take a look at the pre-market gap action. But one thing to look at in the current market is current support's obviously at the 50 SMA at the 425 or so. The strong sell signal, and write this down, would be a loss not of the 50 SMA, because look, every single time it hits the red line, it does what? It bounces. So that's an initial exit target for my inverse positions. If we get down to the 425 or so, I'll tighten up my trailing stop, because at that time they'll have run up sharply and I want to lock in a profit before they drop. I anticipate we will get a pivot or a reversal, or at least a slowdown at 425 or so, 4250 in the S&P, or 425 in the Spiders ETF. So that red line is to be used as a support level, because it's likely it's bounced every single time it's hit the 50 SMA all year long, so no reason to not expect that to occur again. Now, however, if the market does capitulate, the loss of the 100 SMA near the 4120 or so, or the 412, 413, and the Spiders, if it gets way under this blue line, probably not next week, but the week after, that's a major sell-off signal. But the first directional move is a anticipated short drop in the market down to around 4.25. So good question. Let's see, let's take a look. Traders asking about tickers. Let me pull up a few here for you guys. All the Bitcoin related stocks are terrible. I sold my Marathon last week, MARA, because it was going down sharply. Let me take a look at some tickers here. What do you folks have for me? Let's see. Hey, Bob. Is CERTI or TISA better to trade? TZA is better for intraday trades. CERTI is better for swing trades because the leverage is better, at least for me. Let's see, a trader saying he entered EDZ. Let's take a look. And MAA. Let's take a look at these tickers. Let's pull these up. Let me, again, not trade recommendations, but let's see, that's a pretty terrible chart. Let's see. Sava. That's a terrible chart. Let's see, AMH. Does anyone have good charts? Let me know. Now that's a good chart. So congratulations to Polly. You picked a good one. That's a wonderful chart. Hey Mick. Not to say I told you so about UVXY, but I told you UVXY on Friday, right? Let's see. What else we got? SPCE. Let's take a quick peek here. And if I missed your ticker, repost it. I got all these comments flying by. Big turnout. And I agree that SPC may have good support here near 30. I concur with that. But I'd wait for it to take out at least a 2 or 3 day high. I would say, not a trade recommendation. I've traded this. I will look for it if it bounces over the 50 SMA over 34, which would also be a 2 day or multi-day high. So Virgin Galactic may be good for a bounce, but only if it gets over 34. That would be my trigger for that guy. Let's see, Moderna. Let's take a look. mRNA. Yeah, that's a great chart. That's good from both a range and a volatility standpoint. I don't trade $300 stocks, but if I did, that would be one of them. I like Moderna. I also like Apple over 150, right? Apple's up near what, the 149 or so, right under the 150. Notice, please, Apple did exactly what I said it would. Remember, thou shalt not buy nines. So 149 would have been an epic fail place to buy this. But if it climbs over 150, we're good to go. And I expect at some point Apple will. I really like Apple as a company. It's one of the few that I would not ever short in a million. I would never short Apple. I would never short Amazon. Okay, I think that's about it. I can't think of any other. And I wouldn't go short in consumer staples like Johnson & Johnson or some of the reputable healthcare industry sector. But this Apple might be a short under 146 or a long over 150. But notice please how it's squeezed up to the decade value, right under the 150. So, these patterns repeat themselves, which is the great thing about trading intelligently and carefully and cautiously is we've got the strongest charts and we have rules behind them. Hey, Matt, that's just a phenomenon, just something he's asking, why are 9 so bad? Well, I've taught tens of thousands of traders the last 21 years to sell anything with a 9 in it, so I'm sure that has some impact, some small impact on the industry, but more importantly, 9 just looks dang expensive, right? It's, if you buy the 141 and sell the 149, that's great. If you buy the 151 and sell the 159, that's great. But I at least tighten up stops, trailing stops if you're in something and it gets up to 9 value. So that's a good point. Let's see, some other charts here. What do we got? EIDO. That's the worst chart of the day. That's a horrible chart. Guys, give me charts like this one. All right, things that are going up. These are the kind of charts you want to trade as an active trader. Things that go up if you're going long. You don't want to trade stuff that's chopping sideways. Sideways, again, it's not a trade recommendation, but personally, call me silly, but I like things that mostly go up. All right. Hey, Dave, someone NVIDIA isn't up, and someone asked me on Oracle. You guys stay away from the large cap. You don't want to trade your Oracles, your NVIDIAs, your Microsoft. Invest in them all you want. They're good investment grade instruments, but not for active traders because the range is no good. If you take a look at Oracle, for example, I haven't looked at Oracle in a long time, but let's take a look at Oracle. Actually, that'll play. That's okay, but it's loopy. It's got too many pullbacks. So if I were to put my hard-earned capital to work, would I trade this guy? Which one would be easier to trade and more likely to make you money and less likely to bite you in the ass? Would it be Oracle or that chart, or that chart, or that chart, or this chart? You want charts that are tied tight like this. So Oracle's good. I like that it's up, but it has major pullbacks, which makes it tougher to trade. You want charts that are focused, the clean, tight charts, like my Mont Blanc pen here, right? Or this doohickey, right? You want something that's a nice, clean breakout that runs a little something like this, preferably less than 30 or 40 bucks a share. Let's see, GE and Ford, let's take a look. Again, all we care about is money, the making thereof, and price action. We do not care about news. We do not care about fundamentals. We do not care about price earnings ratio. We do not care about forward earnings forecast. GE looks terrible. That's definitely a sell chart to me. Ford looks really sucky. Ford looks terrible. Another terrible chart. Oracle is okay, but it's choppy, so it's not as good as some of these others that have nice runs like that, or like that, or like that, right? If your guys' charts aren't looking like this, you're fishing in the wrong pond. You can hack away at weak charts, but that's a lesson in frustration. You want to set the stage for potential success by trading charts that are front-loaded, that have a proven track record in a history. And again, we don't buy 9s. So next week, watch what I say. It'll probably do a false breakout to like 50, 30, or 40, and then be back down here or even lower next week. So we don't buy this here, but it's a great looking chart. It would have been great to trade up to here. Next cycle would be over the 50, run the 50 to 60. Hey, Stephen, let's see, ELS and DAVA. And again, for the don't buy 9s rule illustration, Apple is a perfect example. Anybody that bought Apple at 149 is now $4 or $3, $4 in the red. You don't buy 9s. That's a very easy to remember, right? I like things that are easy to remember. And we were about out of time, gang. Let's take a look at a couple last ones. Alpha Bravo Bravo Victor, ABBV. That sucks. Too choppy, not enough range. I wouldn't touch that one. Let's see, someone's asking about Echo Stop. Hey, Bob. Yeah, look in over here on the right side where I'm typing, that's where the tickers are. Let's see, someone's asking about Tesla. I called Tesla short at 940, cover the 770, I think, a long time or something like that. Cover the 8s. That's quite possibly the worst stock chart in the history of mankind. Tesla's a horrible chart, right? I'm just curious, why would anyone be interested in a chart like that when you've got charts like this instead? I'm just, it blows me away. Hopefully, I'm going to be polite and professional, but why on earth would anybody ask about a chart that's going sideways? If it's going sideways, you don't trade it. Period. All right? If it's going sideways, don't trade it. Because see, your goal as a trader, let me break this down. It's to make money. If you buy something that's going sideways like Tesla, it'd be really tough to make money because it's a haphazard, random, expensive, narrow range piece of junk, right? Tesla, no. Apple was good to 150 and now no. Charts like this or like this, those would be kind of a yes, all right? So this would be friendly here, but charts that are going sideways are not the things you want to trade if you want to make money as a trader. Things that go up are things that you want to make money with as a trader, going long, or things that are going down for shorts, but things that are going sideways and chopping around, whether it's an Oracle or a Tesla or whatnot, not your best bet, right? You want to place your bets at the best charts. And I think, really good points from you folks. I appreciate the kind words and everything. One of the things that I urge you to give some thought to is joining my live room. I like to give you very intelligent, specific, hopefully pretty accurate training and specific entries and exits live in real time. So if you're not yet a live room member, now would be a really good time to join up. If you're a former member, you can rejoin if you want. The links for the regular monthly membership are on the site in there somewhere. But do join me at tradingopen.com for good, intelligent, specific, mostly day trading. And we covered a lot of swing trading charts today, but mostly we go over intraday trades in the live room. Maybe 70, 80% of the coverage is day trading, maybe 20, 30% swing trade. So mostly intraday trades, but we also cover swing trades. So you get it all at Trading the Open. So does that make sense? I hope it does. Let's see, a question from Brian. Can the ADX tell a trader if it's moving sideways? Well, yeah, but you don't need the ADX or the ATR line. All you need is your eyes. Look at the chart. If it's going sideways, don't trade it. If it's tight, clean going up, trade it. Don't abdicate your thinking to derive technical indicators. Just use your brain, right? The best technical indicator is up here, right? You got to figure out, based on experience of real money trades, where's the next likely run going to be in the market and how to capitalize on it and exit in time with profits intact before the market takes it back. So good stuff. Yeah, good point from Margaret saying, hi, Ken, I think people trade Tesla because they listen to the news. Yeah, stop listening to the news. I mean, I do like Jim Cramer. I think he's smart. So I watch Cramer's 10-minute YouTube videos religiously every day around 6:30 my time, around 8:30 East Coast time. So I like Jim Cramer because he knows his stuff. He's a smart guy. He's entertaining and he's got some good insights. But other than that, I don't personally watch or listen to much in the way of news. I watch some of the CNBC clips on YouTube channel now and then, but that's just for kind of background music so I know what the public is listening to. In terms of my own trades, I do not trade what the public has been told, right? I was trading like UVXY yesterday. The talking heads are not going to tell you about any of these things. I told all my traders about them and gave specific entries yesterday. That's extremely important, right? Think about it. The truth of the situation is that the Wall Street professionals and the talking heads have different priorities than us as day and hyperactive traders do. So you have to take it with a grain of salt. Tesla's a good example of a terrible chart. UVXY is a great example of a great chart that I was actually trading yesterday, and I'm still in over the weekend. But you're not, how to say, did any talking head on television tell any of you about these biggest percent gain instruments yesterday? Did any talking head talk about UVXY or SOXS or TZA or SRTY or SDOW or SQs or SPXS or whatever? No, they kept it from you because their agenda is not the same as our agenda. Our agenda is simply to make money from the strongest moving instruments. Their agenda is keep the advertisers happy and cater to the at-home, the slower paced mom and pop home investor, and that's fine. That's a different crowd. But you and I are sharper. We're focused on what actually runs. So anyway, keep an eye on these guys. Let me be explicit. Next week, I would not buy stocks. I'm not going to buy any stocks next week unless the market takes out all-time highs. I think we're much more likely to see a pullback and a correction, and I will be focusing my energy and capital on building inverse positions on any continued market weakness. To learn how to do that, and specifically what I'm trading, how I'm trading, the exact price entries told to you ahead of time. I don't think anyone else does, but I give people ahead of time alerts. I won't call them alerts, but educational resistance areas above which I'd likely buy. I give them to you in the live room. That's a very important kind of a meta, big picture thing. Did any talking head in the world tell you guys say about that or about that yesterday? Will they ever talk about inverse or leveraged ETFs? No, because they are extremely risky instruments, for experienced traders only. So that's probably why. And I'm on the side of the networks. I think they're correct. These are for very sophisticated traders, as the disclaimers that you have to sign before you're allowed to trade them explain. And I completely agree with that. Caution is warranted. But when you know how to trade them, look how beautiful these guys ran yesterday, right? Really big up moves. So anyway, I'm going to wrap up for today. We're out of time. So thank you so much for being here, and do join my live room exclusively at my trademastery.com site for trading the open. Thanks for being here. Take care, everyone. I'll see you guys next time. Have a safe and productive and hopefully a profitable week next week, and stay on the right side of your trades. Wow, really big turnout today. Oh, thanks to all of you. I'd stick around because I got a big audience, but I know it's a summer Saturday, so let's wrap up on time, and I will see you folks in our next Saturday event. Do be sure to join my live room, and I will see you there.